Yeah, now we're talking. Break time's over, baby. Back to work tonight, Wednesday evening, getting ready for Thursday's trading session. We get some big news tomorrow. We had some big moves to the charts today. Got a bunch of great trades setting up for Thursday. You know me, I'm going to cover all my favorite trades for tomorrow. That way you get a game plan to make some money. And as always, before we jump in and get this party going tonight, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video. And as always, if you guys enjoyed the video tonight, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro, right? Let's get ready for Thursday. Got a lot of good trades setting up on my radar for what may be a very, very busy Thursday. Got some big news, some big moves today. Got earnings season starts tomorrow. I'm getting goosebumps just thinking about it here. Well, as you can see here, we got a bunch of ranges right now on the charts here. Range, and range. We've talked a lot about ranges over the past few weeks. It is the summertime season. Ranges tell us what? They tell us look for rotation, failures, breakouts. We got, of course, that big move down on the Emini and the Nasdaq today. We got 100 above us on the oil. Oh boy, a lot of good trades. We're going to cover all this stuff here tonight. I'll make sure you guys know both the long side and the short side here for tomorrow. Now, before we jump in and cover all the best setups and trades for tomorrow, let's make sure, speaking of tomorrow, let's make sure we know what's in the schedule for tomorrow. There are really three big things that you want to have on your radar for tomorrow. First of all is the block of news at 8:30. The jobless claims report really is not the deal tomorrow. The one you got to be aware of is that PPI number. PPI is the producer price index. It's kind of like the cousin of the CPI. The CPI is the consumer price index. Consumers kind of drive the economy, so it has more of an impact, as we saw today. The PPI report doesn't usually have as big of an impact. So even though it is a big news event tomorrow, it's definitely something I will have on my radar tomorrow. It's probably not going to be as wild as we saw when that bomb went off at 8:30 in the markets here this morning. But keep that on your radar for tomorrow. The big news for tomorrow is the kickoff of the earnings season, which will kind of take full flight next week, the third week of July. Tomorrow we hear from Morgan Stanley tomorrow morning. We hear from JP Morgan Chase tomorrow. And if you're wondering why this applies to the futures markets, well, remember, we had 40-year record-breaking, burn your eyelids off inflation today at CPI report. And so we know that everyone's going to be watching the earnings season these next 10 or 15 days here starting tomorrow to see if we see signs of the U.S. consumer and see how the companies are doing in the face of this record-breaking red-hot inflation. So tomorrow, even though we don't talk a lot about earnings because they aren't usually very important for us as futures traders, definitely something I'm watching tomorrow there before the open, probably right around 8:15, 8:30, 8:45. We'll hear from Chase and Morgan Stanley, kind of the big names, the big banking names here tomorrow morning. That may be the big variable for tomorrow. And then one more thing too, keep in mind the next 24 hours, 48 hours here, we are watching rollover on oil. We're currently on the 08/22 contract. We are watching volume right now as it rolls over to the 09/22 contract. I'm going to analyze the 08/22 because it doesn't look like we're going to be doing the 8/22 tomorrow. But be aware though, if you're an oil trader like we are, be aware of that rollover as we go into the end of this week. And then one more important thing here, there'll be no newsletters next week. No newsletters next week, right? Take a break next week. Got some new video stuff I'm working on for our students here at School of Trade. So be aware of that. My last video will be tomorrow night, and of course I'll be off next week. Not to worry, if you're a student of mine, I will still be here for you every step of the way, but be aware there'll be no YouTube uploads next week as we'll get focused on some new course materials for our traders here at School of Trade. That's a good thing coming out for you guys later on this week. Back to our charts though. Now you guys know what the catalysts look like early tomorrow morning. Now, I'm going to cover all my favorite trades tonight. Whether you trade one of these markets or you trade all of these markets, make sure you watch all the way to the end because I provide different trade ideas, different trade variations, different advanced tactics as we go deeper into this video. So make sure you watch all the way to the end. In the meantime, let's kick this thing off here with the NASDAQ, the NQ, or maybe the QQQs, or the micro NQ. A lot of our students trade the micro contracts right now, do really, really well. Really love those micro NASDAQs. index. However you trade in this thing. On the NASDAQ right now, look at this. Look at the size of that single candle, right? Here's a pop quiz. When was the last time we saw a candle, a tick candle, right? Time candles are big like that. When was the last time we saw a 4,000 tick chart candle that big? You got to go back a couple years. That was a monster. Okay, there are 3 big clues on the NASDAQ that are telling me where the best trades are likely to be setting up tomorrow morning in our trade room. First thing is the strong move lower. Anytime we see a real strong move in one direction, we know the odds are pretty good. They're going to try to retest that level. So this is a really big factor for both the NASDAQ and the S&P. And be aware, most of the stuff we talk about tonight on the NASDAQ can also be applied to the S&P. They're very, very similar. And by the way, this is a 4,000 tick chart here on the NASDAQ. You'll see all the time frames in the upper left-hand corner here tonight. So strong move down there, right, for the bears. We know that if this market can kind of break free of this trading range, we know exactly where they want to go, right? They want to take out that low here for tomorrow. So sellers right now have one thing on their radar, and that is to retest that low and possibly take out some of those big levels of support that we talked about last night, down around 11,429, down to that low at 11,320. The bears have that on their mind. Now, the bulls have their own ammunition here tonight, because you can see here, this is a very easy to see 1, 2, 3 reversal. Now, you'll notice here they popped it up, right? Strong move up. Anytime we see a strong move, we expect a retest of that high. We double top, we triple top, and this basically goes into what will be seen as a bullish trading range. Now, why is a bull range important to me? Well, because ranges act like magnets, and the 2 ways that buyers want to trade this bullish range is they want to find levels of support below the range and buy those areas below the range, and also, too, they want to be trading breakouts, go through that high. Breakouts the high. Now, where do you think those buyers want to go right now, right? Where do you think the buyers want to go? The buyers have one thing on their mind, right? It's probably really upsetting to them that wick top right there hasn't been hit yet. And I would imagine that wick top is going to be a big objective for those buyers, along with that juicy big round number at 12,000 and that previous high at 12,025 half. On top of that, we have last week's close all the way up at 12,160. That does seem to be a little bit much for now. That does seem a little bit unrealistic right now, considering the overall situation we saw today. However, remember, on Thursday and Friday each week, once we turn the corner over hump day, right on Wednesday, Thursday and Friday, the prior week's closing prices become these big psychological magnets. So if the buyers get a boost tomorrow, if the buyers get a gift tomorrow, watch that 12,160 and a quarter. That'll be a really great target for us, if they can get up, if they can muster the strength to get all the way back up there. So we know we've got a bunch of clues on this. How do we trade this, right? How do we trade this? Well, again, buyers pretty simple. Buyers want to buy the low down here. Buyers want to buy the breakout. What the seller's going to do right now is the sellers have kind of a difficult time right now, because if the market goes higher, you can't sell this. It's not a good trade in a bull market into a trading range. And again, remember, when I say bull market, I'm a short-term trader. I know a lot of you guys are longer-term traders, and you're more than welcome to be a longer-term trader. But be aware, right? Short-term momentum is how I trade. I'm well aware there's a long-term bear trend here right now on a 4-hour chart or a daily chart. I do understand that. Short-term momentum, though, got to be careful selling as we go higher here. The sellers really have to get underneath this area and kind of break it down, right? So bears have to kind of break free of this trading range and get that short going lower. So as we go lower here, what would be some of the best trades here for us as we go lower right now? Well, first of all, I would love to try to trap in some of those bears. I'll bet there'll be a lot of sellers that if they can get a lower low over here, lower high, right? I'll bet a lot of sellers will try to sell that first pullback. And I'd like to use those stop losses as fuel for a run back up. So a seller failure off of some support levels down below this trading range is a really nice setup here for us on the long side. Now, we do have that trend line coming down, and that trend line combined with that, again, very important big move down that still hasn't been retested yet, what that does is it requires me to be a little bit more patient on the long trade. We talked a lot about these last night, if you recall. As we go lower, the bears try once, the bears try twice. Remember that? We call these crown reversals. If you watched last night's video, you were ready for these here today. Anyways, we are looking for something pretty much identical to that right over here. As we go lower, think about now those bears coming in and trying to sell it back down to that low. Remember, the range above us is a magnet. We haven't broken free of that magnetic pull yet. So once those bears try a couple times, what I want is I want to get the trap entry right below that low. Now, why the trap? Well, because we have a trend line coming down. And so if I just go in and try to buy into stops, I'm buying right into that trend line. Those are not very reliable trades. If you want the most reliable, consistent way to make money in this situation, the way to do it is again, I want to trap in some of those bears, use their stops as fuel, but I have to be careful because that trend line coming down. So I really like that. Called a crown reversal. It's more of a two-try failure, we call it, with that trap entry to avoid that trend line. That is one of my favorites here for tomorrow. Now, as we go lower here, how could I start to sell it as it goes lower? What do you think? At what point can I start to get short as it goes lower here? The one thing, well, there are a couple of ways to do it. Let's talk about one of them. We got plenty of space down here. So as the market goes lower, think about these three breakaway patterns here. One would be a very strong move down. Let's say we open up in Asia, we go into the US tomorrow morning, real strong move down. We pull back with a shallow pullback. We make a lower low in price, and that trap right above that high is a great breakaway or a kind of a great breakout pattern, right? Repeat after me. Strong move, shallow pullback, lower low in price, and of course, traps, baby, right? As we always say on these videos, we have a lot of fun with this stuff in our trade room. That is a fantastic trade to go back and retest those lows. A lot of times, though, when we see a big move down and a big pullback, a lot of times as the market moves lower, it begins to grind down. So watch for what we call a pop and grind, right? Where it pops down, and then what happens is it kind of separates off the moving average and begins to grind lower like that. The grinding motion is the key giveaway on this one. In this case, we're going to mark a trend line right off that low. I'm going to bring that trend line and mark it up off those big highs up there. And what this does is it allows me to go to look left and find some of these prior swings. The moving average will come down at this point, and this is where the magic happens. Now, with the bears now taking back control of momentum now, and we know where they want to go, now we're simply going to wait for that pop up around the top of that channel. Now, the reason why I like to get above a prior swing is because that's where you can start to find trap entries. Traps are my favorite entry patterns in our trade room. You guys learn all about that stuff in our free video classes, right? So trap setups, if the buyers will come in, try to buy off that moving average. This is the 21 moving average, by the way. You'll learn all about this in the free trading course. And of course, once those buyers come in and try to buy it, think about where their stops are, and we can take out those stops. It could be a trap. It could be a failure. It could also be, as the moving average comes over, as long as we still have room to go, a pullback combination. Traps above prior swings, failures off the moving average, and then first pullback off the moving average once that failure triggers. Traps, failures, pullbacks. Again, you learned all about those in the free trading course, which reminds me, I know that most of you guys and gals have already taken the free class. You've learned all the setups. I get so many great emails every day. People are using that stuff to make money on their own accounts right now. So inspiring for me. But listen, if you're one of the few folks who haven't taken that free class yet to learn the actual entry techniques that work best, what I'll do is I'll put a little link up here for you in the upper right-hand corner for our free trading course. Grab that link, learn that strategy, that simple strategy I teach in that course will help you stop missing the best trades each day. If you're taking too many losses or you're making too many mental mistakes, or I have a lot of students right now that are transitioning from part-time trading to full-time trading, the roadmap I teach in that strategy will get you on the right track and start getting you some money out of these markets here. So grab that link in the right-hand corner and grab that free trading course. So again, watch that 1-2 go, right? Watch that 2-try trap, watch that pop and grind, and then look for those shorts as we go back down. Now, once we get down here, right? Once we get down here, how can I buy down here? Absolutely, because now it's mission accomplished, right? Now we've got that retest of that low. How do I buy this thing though off of that low? How do we buy off that low? And also too, how do we buy it as it goes higher here? You know, what do some breakouts going higher look like? Let's talk about that next on the S&P. Now, the S&P will be very similar to this, a little bit different, right? Let's cover this on the S&P, though. So on the S&P, you're going to see very similar here, right? S&P is very similar to the NASDAQ, like they always are. There are three basic clues, right? One is that strong move lower. We know that. One is that bullish range. We know that. And the other one is that lonely wick top up there at 38.73. So a lot of this is very similar, right? Buyers want to buy the dip. Buyers want to buy the breakout. Buyers also want to buy that bounce off of that low. And sellers have a little bit of a difficult time right now because they have to get short after it turns over. And again, if we go higher here, very difficult to justify selling as the market breaks above a bullish trading range. So how do we do that, right? We talked about the buy side here, and we talked about the breakout going lower. First of all, again, if we get that strong move, shallow pullback, lower low, all those same pattern setups will work over here. Now let's talk about as we take out that low. Okay, so now we're back down at that low now. You got to memorize this sequence right here. One of my favorite reversals, I call these double bottom reversals in the essence of with that big move, that double bottom reversal. Now you'll notice on the S&P, same thing in the NASDAQ, there's a lot of other support levels down here as well. So this area, this general area here. Okay, now we take out that low, right? Here's a scenario. We take out that low. At this point now, what do we always say? Mission accomplished. Next. We're very bearish at that point, but we're at a major turning point. Okay, not last night, but the night before last, we talked about what it takes to trade a reversal. What were those three things? We need a major turning point, like that low. We need signs of exhaustion, like the 1-2 try rule, and then we need some sort of catalyst, right? We need to run some stops. Those are the three kind of components for a great reversal. Have a major turning point, have signs of exhaustion. In my definition, the signs of exhaustion are letting in this case, the sellers try twice. And then once we have that second try on, we know where those stops are, and we can look for basically to run those stops and run higher. Now remember, once we get those bears trying twice, and we know those sellers are all trapped in now we can go out, get that failure on. And then remember, this is where the fun starts. At this point now, we mark up that high, we mark up that low, we look left, find some prior swings, and we grab that first test. Oftentimes, it's a trap. Oftentimes, it goes below the moving average for a failure. Does that make sense? Right? Into that pullback, and we go. Where do those buyers want to go at that point? Oh, you know, baby. They want to go right back up to retest those highs. Right? Markets are always trying to take out the edges of these trading range. If the bears can take out that low, the bulls take over, they want to take out that high, right? They're always trying to punch out one side of this overall range. So again, as we go lower, watch those bears get trapped around those lows. Use those stop losses as fuel to buy into those stops. And then as the market begins to push higher now find that new channel, mark that trend line, find that channel low, and again, look for those traps below that low. Grab that trap, grab that failure off the moving average, and grab that pullback now for that blast going higher. This could really be on both the NASDAQ and the S&P. This could really be some of the best trades we get for tomorrow. Because again, it is somewhat likely those bears get that retest here. Same thing on the NASDAQ. One thing you can see though on the S&P that's very different than NASDAQ is the S&P does not have as much space down here. So one thing about the S&P, which again, you can see it's going to be a lot easier in the NASDAQ. The NASDAQ has a lot more open space to go. So there's a lot more space down here to get those breakouts I mentioned earlier as we go here. Not as much space here, right? Not as much space here on the S&P. So be aware of the situation. The space is a little bit smaller there on the E-mini. Now, one thing we haven't talked about yet is how we trade the breakout, right? How do we trade that breakout? The breakout really could be another very, very good trade for us here tomorrow in our trade room because, again, I mentioned earlier, markets love to take out the edges. So think of that big edge at 38.73 and those big wick tops. Wick tops just love to get hit. And sure enough, if they can get this thing to punch back to those highs, there's that prior week close up there at 39.05 half. That is definitely something that is potential for these buyers tomorrow. It seems a bit unrealistic right now, but who knows? We got that big earnings report coming out tomorrow morning. We got PPI tomorrow. We have seen stranger things, that is for sure. So we talked about how we want to get that 1, that 2, and that trap, right? We talked about that on the NASDAQ because, again, we have that trend line coming down. We're worried that bears will be too strong to go back to retest the low. I really like that 2-try failure right there with that trap. From there, though, at this point now, as we rotate and run higher, here are a couple things I'll be looking for here for tomorrow. One is a 1, 2, 3 breakout. First one is going to be a pop-up to retest that high. We'll pull back again to the 21 moving average. We'll see a jump off that moving average. Now, the key to this is the jump. That's the key. We oftentimes see a lot of strong moves, but they don't jump off the moving average. Okay, so be aware of that. And again, I'm not a big fan of trying to sell back down into the range at this point because it is a bullish trading range. Trust me, I've got some shorts on my radar, and we'll talk about that in a moment on the crude oil. Crude oil is ripe for a short above that trading range. These charts right now, the S&P and the NASDAQ, at least again, we know right now, these are not ripe to be sold above that trading range. Momentum is too strong at that point, and again, there's a lonely wick top up there, which is just begging to get hit. So back to our 1, 2, 3 breakout. 1, 2, 3 breakout. And by the way, guys, 1, 2, 3 moves. Okay, when you come out and join us as a student in the trade room someday, those 1, 2, 3 moves, you will learn to love them. You will learn to love them. You'll learn more about that in our membership classes. Now, what do we do at that point? We're going to mark up a trend off that high. Okay, mark that trend line off that. Remember, at this point now we're blasting, right? We're blasting and running higher here. Marking that trend line up. We're finding that channel now off of that low. We're looking left. We're finding those prior swings. My favorite trades always come right around the low of that channel. It'll be below the moving average, obviously, and right below a prior swing. What I love about these deep pullbacks is you get the pros coming in to buy the traps, but then as the rookies come in and try to short this thing back down again, we then can trap them in and use their stops as fuel for that pop. So again, 1, 2, 3 breakout. Number 2, this also applies to the NASDAQ as well. Okay, everything I'm talking about here right now can be applied to the NQ as well. Trap, failure, pullback. You'll learn those entry patterns, those entry setups in that free video class I mentioned earlier. Also, too, don't forget too, the same strong move, the same shallow pullback, the same higher high in price, right? Different direction now. Traps, baby. Great setup. Love that setup. And remember, too, if we get lucky, we might get a channel off that low, off that high. Mwah! That is a beauty. That is a beauty. I'll tell you right now, it's tough to lose money on those types of trades. It's tough to lose money on that trade right there. That's a very, those are almost guaranteed winners. They really are, right? Those traps. So anyways, that's 1. That's 2 now. And then again, if it pops, doesn't pull back and blast, right? If it pulls back and blasts, that's a 1, 2, 3 breakout. If it pops and starts to grind now, and these can be kind of misleading because it feels like they're all slow and kind of weird feeling. These are tough sometimes when you're new, but when you see the drive, right? The grind like that, the grind tells you mark that high, mark that low, go find those prior swings and hit them right where it hurts off that first test, right? First test is the best test, as we say in our trade room, off that, right off of that low. And again, we know exactly where this market wants to go. It wants to take out some of those highs, and who knows, right? It may keep punching and grinding up there at 39.05 half here. All right, I think we've covered most of the bases here now on the S&P and the NASDAQ. Again, be careful selling above the high. Watch those breakouts. Trap in those bears for that long buy that double bottom reversal, and we'll see if those bears can come in and punch this thing going lower back to retest those lows. I'm sure I've missed something here tonight. Obviously, markets are always changing overnight, so make sure you join me tomorrow morning in our trade room, and I'll give you guys some more options here as we know more into those news reports tomorrow morning. Last but not least here, let's wrap things up here on the crude oil. Now, like I mentioned earlier, crude oil does have a rollover to the 922 contract coming at some point here in the next 2 days. It does not look like it'll be tomorrow. It looks more like it'll be Friday. Usually when rollover happens on a weekend, it's that Friday, not that following Monday. So be aware of that if you're trading oil with us tomorrow in our trade room. There are 4 basic clues here that tell us where the best trades will be here on the oil for tomorrow. The first one is really not from today, but it's really important that we don't forget we still have that big move down from yesterday, if you recall. Remember that $8 move down that we saw from yesterday, which we love, right, for the price of gas right now. But why is it important? Why is that big move down yesterday so important? Because now, clue number 2 is that sideways trading range. Remember how I said earlier? Remember how the S&P and the Nasdaq, and the Nasdaq are short-term bullish into a trading range? And so how do you trade that, right? You trade the failed breakout down here, and you trade the breakout going higher, right? These are the 2 ways you trade a bull market into a trading range. And again, guys, before you go light me up in the comments right now, this is a short-term momentum. I'm a day trader, right? I'm not a long-term trader, right? It's not a 4-hour chart. It ain't a daily chart, all right? I get it. The long-term trend is bearish. I understand that. But however, right now, S&P and Nasdaq, bullish into a range, so we know that. Same thing is true now for the bears going lower, right? So on the oil here, that big move down from yesterday, we're now chopping around instead of a range here. So now look at that failure up top and that spit out the bottom, right? So we sell up top and we sell the breakdown going lower. Okay, those are the basic ways you trade a bear market into a trading range. So this is important, right? This is really important because if you just look at this information right now, if all you look at is today, it looks more like a bullish range, doesn't it? Yeah, but it's misleading. And that's why I mentioned earlier, for example, in this one, I definitely can sell over this high. We definitely can sell over that high because, again, we haven't pulled back really very far at all after that big move down from yesterday. One more thing here is that major support below. Okay, you can see here this, and now I adjusted this after last night, but there's a bunch of lows back here, not just at 93.67, but consider this 93.67 level a very big support level at this point, right? Now remember, we had that big move down, and so what do the bears want? The bears want to retest that low. Once they retest that low, as we always say, mission accomplished. At that point now, can we get that bounce off of that low? Yeah, baby, I like that trade for tomorrow. Also, too, can we break below that low? Certainly we could, and we can use one of those breakout patterns, the 2-try breakout, the 1-2-3 breakout, the pop and grind breakout, which I mentioned on the previous charts. Where do the bears want to go? At that point, it seems pretty easy. At that point, there's not much space. There's not much in our way here now. We can jump right down to that 90.71, and oh, boy, I love seeing those 90s, right? Let's go back even lower if we can, right? Fill our gas tanks up with those $90 a barrel, right? Who thought we'd be dreaming about $90 a barrel 6 months ago? Anyways, that major support level below us is a big deal. And then, of course, above us, the granddaddy of all round numbers is that 100. And so you really have to think that if this pullback starts to disconnect, you know where they want to go. You know they want to go back to that 100. You know they want to go back to that 188, right? That prior low. So if the buyers have it their way tomorrow, they'll get that reversal. Either on a breakout reversal going higher, or they'll get that bounce reversal off of that low. So now we get a pretty good idea kind of what's affecting this market right now. And I'm sure you've already got some ideas of your own here based on what you've learned so far in this video right now. So first of all, why don't we play the game here? What if we go up? What if we go down? Because it's pretty much a sideways range here for today. If we go higher, okay, if we go higher here, let's talk about the buy side and the short side. The first thing is as we go higher here, I'd like to be, again, you can sell this thing because it is still part of that big move down. What's the problem though? What's the problem at that point? The problem is the short-term momentum, right? Short-term momentum. So just like we saw back here, where you see a really deep pullback after a bearish move down, the buyers try it once, buyers try it twice, and back down from there. In this case, same basic idea, right? Same basic idea. Okay, so if I see that strong pop up, and I get those buyers coming in, and I've got buyers trying once here, lower low, buyers trying twice. Once those buyers try to come in a couple times now again, we assume there are some big money sellers selling to this stuff, right? We assume there are some really deep pockets up there selling in around that 98 even, that 98 half, possibly even up to that 99, right? 99 even as we go higher here. We're not trying to sell into it as it goes higher. That's not exactly my style, and it really shouldn't be yours if you have a relatively small trade account. That's a deep pockets game if you ask my opinion. However, once those buyers can try a couple times, now those stops can get hit, and we can use those stops now as fuel, right, for that run back down again. Now, be aware of this, because usually what I would tell you is once you get that signal, get that short going, and then what do we always say, right? We look for that new channel over the top here. This, you got to be careful on this one though, right? Got to be careful on this. This is usually a very good short right here, right? Usually a very good short right there. Sorry about that. Let me back to my square one here, excuse me, right? So we go up, buyers once, buyers twice. I usually have to get that channel coming down, right? We talked about this on that Nasdaq a few moments ago. So I like that. I like that trap right there, but I'm worried about, you guessed it, I'm worried about these trend lines coming in off of this low. So just be careful though with that short right there. The money will be made. The money will be made here on that short up around that high. One more thing to kind of keep in mind. Let's say it runs up. Okay, let's say instead of seeing a beautiful two try here, we get something like this where it collapses back down, something like that. Okay. In that case, you don't want to sell right into that area. You know what I mean? You got to be careful here. We talked about this last night and a couple times earlier this week here. When you get those two try failures, you want to get them like this. You know, you want to get them up and 1, 2. That way, think about your risk reward. Your risk is here. Your reward is way down here, right? That risk reward looks great. At this point, if we sell right here now, where's my risk reward now? My risk is that, okay? And my reward, well, if you include that trend line, it's right there. Not a very good risk reward ratio. You're not going to be able to get a lot of professional traders who are the ones who really move these markets around. You're not going to get a lot of them to take that trade. What you want to do is you want to think about now what that trap looks like. So find that prior high and then grab that trap. The trap now, think of the trap now. The trap now allows you to go, okay, there's my risk. There now is my reward. Does that make sense? So when you go up like this and you want to sell it, yes, a 1, 2, and that short back down, that's great. Again, my risk reward is good enough to attract the smart traders in the market. But if this two try failure, if this two try goes lower here, right? Something like that now, those are the ones you're going to back off from, because again, your risk reward ratio is no longer very good, and therefore there won't be a lot of other traders who take that trade. And you probably know by now it's that self-fulfilling prophecy that really helps or hurts us, right? So at that point now, we grab that trap and we look for that trap. Okay, because that trap will allow us now to grab not only sell high resistance, but again, manage that risk and reward there. All right, if that's making sense, give me a hell yeah in the comments section. Give me a thumbs up, and you better subscribe to this channel, by the way, while you're down there. So watch that sequence here as we go higher. And then really, can we break out? You know, can we pop up? Can we hold that pullback? Can we jump off that moving average? That's easy, right? That's a 1, 2, 3 breakout. We know where the market wants to go at that point. Mark up that high, mark off that low. You got it. Find that trap, and then grab that first test, right? Again, I like traps. This could be a trap, could be a failure, could be a pullback trade, right? You'll see examples of that stuff inside of that free trading course, right? Or maybe it's a pop and grind. A pop and grind would make a lot of sense. You know, pop and grind would make a lot of sense, because if the bears who sold that big move down yesterday, if they just back away and walk away here right now, you know at this point now that's going to happen. It'll be in the flutter. It'll be in the kind of grind higher. You know how to do this one. Mark those highs. Find that anchor off that low. You got it. You got it. You know this stuff by now, right? Grab that trap. Grab that entry off of that low. Really like that entry as well. And then also, too, don't be afraid, too. Strong pop-up. Shallow pullback. Higher high in price, what do I say, right? Traps, baby. That's a great one as well. Now remember, a lower low in price. Remember, higher high is the key. A lower low in price is not the key. Make sense? Okay, if we pop up and we go shallow pullback but lower low, no, right? That's a two-try failure. Okay, do you see the difference there? Okay, it's a small difference, but a very, very big difference. It's the higher high. The higher high is the giveaway. Okay, hopefully that's making sense. Hopefully that's making sense. And we'll give you a tip off to whether or not if you should be selling it or should be buying it. All right, really good stuff there. Now, as we go lower, this really could be one of the easier trades for tomorrow, because then we again have big move down, mission accomplished. Remember, we get a range above us. Ranges are magnets. And so let those bears, remember, we're still bearish though, right? We're still very bearish, so we can't just buy off that low. I mean, you could do whatever you want, but if you're like me and you want to take a small amount of risk and get more precise entries, it's best to use, well, signs of exhaustion. So 1, 2 tries. Try to have a catalyst, and that means run the stops, right? Because if you're a seller and you're getting short down here, if you're a seller and you're selling right into that low, which is a horrible place because you're selling low, how do you get out of that short? You know, what does that stop do? That stop is a buy stop, right? It's a buy order right there. And so what I always say in my trade room is we run stops at major support below a range because we already know buyers are buying down here. You know, the bears who sold up here, they're taking their profit. Okay, so buyers are coming in. And then when the stops get hit, the sellers now are buyers too. So buyers are buying and sellers are buying. Yeah, that's a recipe for a really explosive move and a stop run going higher. And then again, grab that new channel high, draw them backwards, mark off that low, and then pick it up on that first pullback as we go. Where do those buyers want to go? Easy. They want to go back up and retest the high at 95s. Now, as we go lower here, can I break out? Can I break out and go lower? Hell yeah, why not? Absolutely we can. Right? What if tomorrow's PPI is just outrageous? What if the earnings report tomorrow from JP Morgan or Morgan Stanley, they come out disastrous tomorrow, right? This could easily tank. So what does it look like? Well, first of all, get down to those lows. Then sellers, show me, right? Show me you can hold that pullback and blast. If you can blast off that moving average, right? No. Not just right? No, that's not enough, right? And not just like this either, right? It's got to really punch right through. Then we can mark that low, mark that high. And again, by now, I'm simplifying things. Look for traps, look for failures off of that high. And again, $90 a barrel is that next big round number. Oil loves to go from 95 to 90, 95 to 100, $5 moves. $5 moves are the new $1 move on crude oil. 10 years ago, I would say $1 move. That's your target. Nowadays, it's wild out there. It's $5 moves on the crude oil. Great time to be an oil trader, that's for sure. Or maybe it's a pop and a grind going lower. Pop and grind. You know how we do this now. You know this stuff now, right? Find that trap above that high or that failure off of that high, okay? Or this doesn't seem as likely, but let's say, for example, right, we go lower, we pull back to that moving average, we blast out from there, and then from there now we get that strong move, that shallow pullback, that lower low, right? That could be a trap there as well. And again, connect those lows off that high. Man, oh man, right? I don't think you can find a better entry than that. All right, so careful as we go lower. Watch those bears coming in and struggling for that short squeeze back up into that trading range. And again, be on the lookout here for that pop and that drop, or that pop and that breakout back to 100. It should go without saying, ranges are messy, so stay out of the middle of the range. Same thing is true there for the S&P and the Nasdaq. All right, guys, so the fun's over now, right? All the easy stuff is done. We've planned our trades. Now tomorrow, we're going to go out and we're going to trade our plan, right? A little bit harder tomorrow morning, and we'll do it together in our trade room. If you guys are looking for, if anyone's looking for a good place to learn and trade along, you'll love our trade room. I have all the templates, all the software tools, all the worksheets with all the rules and the setups. You're going to love it. If you put a little bit of effort into this with me in my trade room, you're going to absolutely love your results. I'll put the free trading course, I'll put all the free course stuff there. Start with that free course, learn the basics of that strategy, get your feet wet with it, and that would be ready for my trade room every morning at 8 o'clock Eastern time. You can come in, look over my shoulder, learn, trade along, ask questions, and have some fun along the way. Don't be afraid to call the office. I'll be here if you guys have any questions. Call the office, use that live chat, or drop me a comment in the comment section. I look forward to hearing from you. And by now, if you liked the video tonight, make sure you subscribe, set that bell notification so you don't miss tomorrow night's video. And I'll see you guys tomorrow morning at the opening bell. What will we get tomorrow? What will we get tomorrow? How will the earnings come out? How will that PPI come out? I'm excited. Hopefully you are too. But get some rest tonight. We'll see you guys tomorrow morning. If not, same time, same place tomorrow night on the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.